Hey everyone, Dan here. Happy Friday afternoon. Looking at this update done earlier and take some time off. So S&P closed at 4191. The good news is well above the 4150, and we did kind of test it again, but not above 4200. That could come to be a very important fact come Monday, Tuesday. Um, there are billions and billions and billions of dark pools. Let me show you. Um, I'm talking like unbelievable. These are all $400 million trades and 200 and 100. There's a whole bunch here, and what that looks like on the chart, on the SPY chart. Let me pull that up. These three lines are the billions of dollars of dark pools. So it could be very difficult for us to climb above this wall. This is literally going to be a wall. I'm not saying we won't get across it. I'm just saying it's going to be interesting, and I wouldn't really hold my breath, especially with the debt talks, et cetera, going on. We actually did buy a couple of puts to hold for maybe a week or two. So I anticipate some more pain on the Dow. So that's the SPY. We'll come back to this in a minute and I'll go over all my trades. We had a phenomenal day. Phenomenal. Okay, so we talked about that. And then I wanted you to see the heat map. These heat scores are really big, and there are like two calls on this entire page. I just want you to make sure you understand that. $18 million here in a single order. So the market is still extremely biased on the short side. Now, again, the SPY doesn't tell like the best story. It tells a good story, but because it's used for hedging, some of this stuff could be a little bit backwards. And that's why I like to go here and I look at the dealer hedges. So first of all, you can see the flow has turned a little bit positive, and I realize that's contradictory, but you can see the green option started flowing today. Wasn't enough, and in fact created a divergence as the flow was going up. Price was falling to a certain extent. And then when we get over here, you can see it's just insane how short the market is. Then we come down to the dealer hedging, and you can see they're just getting more and more bearish here. This one is opposite. I'm not going to go into all the detail again, but this should be red if the market is going to rally. And then we have the negative GEX problem. The problem has moved up now, but you can see kind of around this 417 to 422, a whole bunch of hedging, and it's all more negative side. And this doesn't always mean it's going to go down, but it absolutely is a good indicator. So that's that. You can see just a little bit nervous here. I don't think I would be like jumping in right now. There are some bullish things though, like back to S&P. The 50-day moving average did cross the 200, and that happened back in kind of mid-April-ish. This is called a golden cross, and it generally precedes very large moves. So that's got me a little bit interested. But man, oh man, until we get a close above this area here, we've just been just so many big pivot points here that I just don't want to walk into a sucker punch. So I'd be careful. The time cycle data is kind of neutral. I'll scroll down here. You'll see the Dow straight down. This is the ugliest of the three indices, and this is extremely bearish look. It's a little bit helped by the white line being flat, but you're going to see downward chop. And again, this looks bullish if you were to move this out of the upward reversal zone, but it's in the upward reversal zone. It's going to reverse. And again, today we saw NASDAQ pull back a little bit. S&P is maybe in the best shape because it's starting to curve up. The long term is already up, and there's room for it to go. But you don't want these things running at cross currents. That's where we get into problems. So once again, that takes me back to the belief that we could have a pretty choppy week. And don't forget, next Friday, we got some really big news on inflation. So you're going to want to be real careful there as well. So the big money guys, they don't know what to do. I mean, look at the big money index is flat for the last few days. It doesn't stay flat. It's not usually flat for more than a day or two. So this is trippy. Usually when you see this kind of a market increase, you would see the big money guys running this index up. This is called the big money index. That's all that it measures. And then if we go down to their actual numbers of buys and sells, that's looking a little more bullish here. You're starting to see some buying. But again, they've been sort of all across the board. Let's put all this together, and I think what you see is a very confused, twisted story. And then we have negative seasonality coming in here in May. It's not a good time to be long stocks. So I'm just a little nervous here. Okay, let's talk about how we did today. I think it was a phenomenal day. Between Lee and I, we had no losses. So that was 1, 2, 3, 4, 5, 6, 7. That's at 8:38, 9, 10, 11. So 11 trades, no losses between the two of us. And here's the overall stats. So yesterday was a 90% win rate. Last 7 days, we've been running 85, and 30 days now up over 87%. I'm sort of proud of that. And then I'll pull this up and you'll see. So I went 6-0, 6 wins, no losses, for a total of $44 per contract. So 40 contracts earns $1,760. Lee went 5-0. He doesn't work a whole bunch on Fridays. Still $39, not bad. With his 20 contracts, that's still almost $800. Okay, let's quickly review the trades, and then we'll be done. Go back to the minute chart here. Let's see. I think I had them all preset. Yeah, up to a certain point. I'm going to get rid of this red shading just so we have a better idea of what we're looking at. Okay, so let's go to this morning. They took 2 without me because, again, Lee takes the early shift. I take the second shift. I thought I put his in. Maybe I only have mine today because that was Thursday. Was my first trade 8:12? Let me look again. I think so. Let's see. Dan. 8:10 to 8:12. And my last trade was 9:06. And that was my 6, right? No, that was 4. And then there's 2 down at the bottom. Oh, no, there's more here. Sorry. Okay, 4, 5, 6. My last trade was 11:15. Okay, I think we got it. So first trade, we had the bear signal, which is the first thing you need to have. And then, as you know, when you get the signal, you have to clear the nearest dots or the lowest wicks. In this case, when the signal comes already below the dots, then to be more conservative, we try to clear this level here. And so that was perfect. Went in here, chop index had dropped, and boom, boom, good trade. Did pull back on us a little bit, I think, on this candle, but you can see the trend never stopped going down. And I point this out because 1 or 2 members did close the trade before we did as a group, and they lost money. And the only reason that could possibly happen, because if you look at this chart, there's no way that you would close a short trade. No way. But if you're looking at your P&L, you might get scared and close your trade. So we try really hard to get people not to look at their P&Ls. It does not tell the correct story. All right, then the next trade came along at 8:30. Pretty textbook again. Got the bear signal. Had to clear the dot, which was right here. And certainly could have entered on this one, but I was waiting for a bigger drop and chop. I got it here. Actually, I waited. This is the candle I probably could have gone in on, but still got in. Chop was dropping in and out, 2 or 3 candles. Beautiful trade. This one I was in for a long time, but again, it never really went against me. So, I mean, the P&L, yeah, but the trend, no, stayed bearish the whole time. So here's our bear signal. It came above the dot, so we can use the dot. We have to get below the dot, and that happened on this candle, and that's where the chop index dropped. And we ended up riding this thing until here. And made a few bucks. It's not as good as it looked because we had some time decay, but we did pretty well. And then we had a bullish trade, so we can go both directions. And in this case, the bull signal came way down here, and it did clear the dot here. So technically, the signal validated here. But once again, I try and wait for that drop in the chop index, which gives me more confidence. Could have gone in on this drop, waited for one more confirmation. All we're looking for is, $6, $8, $10, $12 per contract per trade. They really add up. And the fact that we're able to pick this really periods of strongest momentum strong enough that we can usually get out in 2 to 3 candles, I think it really makes the system easy, personally. This one, I think I had a break even. Did I have a break? No, I made 1 penny. So here is the bear signal, and here is the dot. It validated, whatever. It pierced below the dot here on the same one I went in on, and you can see there was a pretty big drop and chop. This was not a break even. I made money on this trade. I don't think I marked my exit. Nope, sorry. Entered here, 1050, exited here. Perfect. Everything the way it's supposed to work. Then we had another short here. Same thing. We got the bear signal, and you'll notice there's no real dots. So that means we have to just clear the nearest wick, which is right here. So this would be the one to go in on, and I did. It had a nice drop and chop, and I was out the next candle. I'm hoping you're seeing a pattern. What we do works extremely well, 87% of the time now. I think that's it. I think that was it for the day. So pretty great day. I hope you guys did well as well. I know a lot of the members had huge days. We got amazing testimonials from you guys. Keep those testimonials coming. We love to see them. And as always, reach out if there's anything that we can help you with. All right. Thanks, everyone. Have a great weekend.